Your Excellencies, members of the Diplomatic Corps, representatives of international organizations, Governor of the Central Bank of Trinidad and Tobago, Dr. Alvin Hilaire, members of the board joining us today, Deputy Governor of the Central Bank, Dr. Dorian Noel, our distinguished panelists, Mrs. Listra Lucilio and Mr. Mark Pereira, management and staff of the Central Bank of Trinidad and Tobago, and of course the Trinidad and Tobago Securities and Exchange Commission, members of the media, distinguished ladies and gentlemen. Good morning, my name is Dimitri Gittings. I am the IT Governance and Risk Officer here at the Central Bank, and it is my pleasure to welcome you today to our panel discussion titled Considerations on Crypto Asset Regulation. Today, we hope through our presentations and discussion to raise awareness on the topic of crypto assets in Trinidad and Tobago, and of course, to gather feedback to support our goals of developing an appropriate and adequate framework to address the same. Today's presentations have already been uploaded to the bank's website. You can access them via the latest news section. So today, following our presentations, we'll have a question and answer session. But at this point in time, I'd like to turn over to the governor who will lead off our presentations. Thank you.
Yes, thank you very much, Dimitri. Welcome everyone to your Central Bank of Trinidad and Tobago. Today is a very interesting and exciting day, and I'm glad you took the time to be with us. Now, I only have 10 minutes allotted to me, so let me get straight to the heart of the matter. But you know, we start off with a major problem. What exactly is this animal in this room running around that we are dealing with? What does it eat? How do we recognize it? Who is its owner? Where does it live? Can we pet it? Or can we say it's too dangerous? We have to be able to work these things out because otherwise we could be lost. So let's start with a simple definition of the scope of what we're trying to deal with. And we're talking about crypto assets as encapsulated in certain concepts. One is private. Two is digital representation of value. Three is cryptographically secured. And four, it is dealing with blockchain or certain technology. Then what that means in fancy terms is that not one person is involved in carrying it out, but a whole slew of people. This is important to know, because sometimes if you don't know what we're talking about, we don't know what to regulate, we don't know if we're doing things right or wrong. But what are the type of crypto assets that we're envisaging? We could think of three. One, something that is backed by nothing, like Bitcoin or so, and I'm sure we'll get into some controversy over that. Then we have some things that are backed by something, what you call stable coins, meaning that their value is linked to something, either the US dollar or something. And how do you do that? Well, by some kind of either algorithm or you have reserve assets. Then you have a third set of assets, which are what's called other assets. Could be security, tokens, and so forth. So this is, we are building the shape of this animal. Well, why are we involved in this thing? Why people get involved? Well, a number of reasons. You say that it could be less costly to make transactions. You have transactions could be very quick. You have accessibility. People can move very quickly in and out of this, decentralization, and so forth. It could also promote financial inclusion. But to a large extent, most people just say, well, you could make a lot of money out of it. That's it. But there are risks involved in dealing with this activity. Very quickly, what do these risks represent? You could have a whole macroeconomic situation that could be problematic. Why? Central banks are generally accustomed to dealing with monetary policy and controlling the supply of money and so forth. If you have a private instrument, then you can't be able to do that. So you could have a macroeconomic problem that you're dealing with. Then financial stability, to the extent that people get involved heavily in this activity, then it could mean that it has links to the formal financial sector, your banks, your insurance companies, etc. And something that starts in one area could spill over to another. You have consumer protection. Are people understanding what they're getting into? Are people being scammed? Are people being fleeced and so forth? Legal risks. What is this thing? Is it legal tender? Is it not? Do I have legal recourse? Is it an asset, etc.? And then you have issues of market integrity, contestability, etc. Before going into too much detail, you notice that there have been some episodes of important volatility in this crypto market. You had FTX problems that really spilled over to other areas. You had even the stable coin that was supposed to be stable, a big problem in that, Terra, Luna, some time ago, and then it affected other markets. So volatility is a feature. Now, how do you deal with public policy on this? You have three basic approaches: ban, contain, regulate. Banning. If you ban it, well, you say, well, you know what, I don't want to be part of it. Well, what does that mean? Can you enforce it? There's a problem. You may be able to ban it because then you say, well, you have nothing to do with it. But then you may not be able to enforce that ban. And can it, if not, well, what are you doing? Contain. Contain is sort of like banning, but you're looking at it more in a niche sense. You're trying to just cordon it off, quarantine it, and make it just deal with one particular aspect. In which case, no, you may be able to get some more out of it, but sometimes it could be very complex, where exactly the line is drawn, etc. The other way is regulate. Well, regulate is more nuanced. It requires more work. You may be able to get certain things out of it, but you could allow innovation, because in banning now, you may not be able to allow any innovation, but sometimes standardization of these regulations could be a problem. So let me move on to, right. What we find is that country approaches differ widely. Now, this thing has been around for a while, over the last decade in particular, but if you look at countries to get one experience, well, it's like, well, anything. Two extremes. You have El Salvador. Some years ago, it decided, the president was in charge of this, let's make Bitcoin legal tender, and let's have a beach that is devoted to Bitcoin, and it'll be the future, and we'd have big mining and all this sort of thing. There's one part. Then you had China now, where you had a lot of mining taking place, and they say, you know what, let's stop this thing. So in China and El Salvador, you have a wide variation, and in between you have all sorts of things. Even the US now, they're still trying to figure out whether it's a commodity, whether it's a security. So is the CFTC involved as the one that deals with commodities, or is the SEC involved with securities? It still is uncertain. And every day you find that you have different judgments that either make the markets go up or down. It says it's a victory for Bitcoin, there's a problem for Binance, all this sort of thing. So the issue is that there are huge variations across the world. International agencies are striving to establish a harmonized framework, because international agencies were on the sidelines initially and said, well, you know what, this thing is small, is niche, is interesting, but not really affecting us that much. Well, things are moving further pace, and they realize, no, you have to get involved. Because if you do not have some kind of harmonization, then you have what you call a race to the bottom, where people or enterprises go to the areas with the lowest jurisdictional apparatus, what you call regulatory arbitrage, and then things could get out of hand. And you have the same problems that I was giving you before magnified. So now, a lot of agencies have come in. The Bank for International Settlements, the IMF, Financial Stability Board, the Commonwealth, you name it, everybody's getting involved in the story. Without going into it too much, we would say that the international approach is evolving and trying to be harmonized. If you look at the International Monetary Fund, they have developed 9 principles, And you could look at it at your leisure, talking about not keeping it as legal tender, dealing with the monetary policy aspects, dealing with consumer protection, dealing with a solid regulatory framework, trying to avoid excessive capital outflows based on this thing. And then they have the last three issues dealing with the international side of it. Then you have the Bank for International Settlements, their agency that deals with bank supervision, have issued some guidelines to be implemented by 2025. Now, quickly in Trinidad and Tobago, we have seen that there is some growing interest. It is still somewhat anecdotal, and we hope via this presentation and this discussion we'll find out some more. But people seem to be interested. You know, Trini is involved in everything. People seem to be interested. There's some mining taking place. We understand that when people are accepting it for payments, there are plenty of people taking hits on websites from Trinidad and Tobago. We have our regulatory sandbox and hub. People are interested and saying, well, you know, I want to set up a kiosk. How do you do this? ATMs and so forth. So there is interest. Then we have the current domestic legislation, however, does not deal frontally with this. Now, I will leave a lot of this part to, we had IMF technical assistance recently, and the report is going to be published on the IMF website on Thursday morning at 10, so you could look at that. They looked at the regulatory framework in Trinidad and Tobago and realized that it does not really capture dealing with crypto assets. So we need to deal with that. Now, let me wrap up by saying, what have we done so far? The three regulators, the FIU, Central Bank, SEC, in 2019 issued a joint statement, really a warning about things, that you should look at the issues involved. You have consumer protection issues, could be volatile, it is not legal tender, it could be scams, it could be Ponzi schemes, etc. You could review that. But we still need some work to do. So what we are saying now, at least at the central bank, there's urgent need for regulatory clarity. If you do not have clarity, you will not be able to move forward, you'll not be able to promote the industry while having good investor protection. We need to do that very quickly. We have our commitments in other areas, such as anti-money laundering. We need to be able to deal with that. We want to move on those areas. And we also have a lot of international experience that we could draw on. So the time is now. We think we should move very quickly to promote public education and to deal with this thing, because in our view, inaction is not an option. So thank you very much, and I'll put you on to Lystra.
Hi, good morning, everyone, and thank you. It is such a pleasure to be here with the regulators as well as the industry, because we need both sides in order for us to understand everything that's going on. So because I have 10 minutes as well, I'm just going to go through this quickly. And just to let everyone know, we will have all the slides available. In fact, I think they're available now on the websites. So the SEC, Securities and Exchange Commission, we are the regulator of the securities industry. And in essence, what that means is that we regulate investment products. So when you're looking at things on the stock exchange or the mutual funds or bonds, we regulate those things, all right? So you're here to hear about crypto. I want to get your feedback. So I want you to take your phones out, put on your camera, point it to this QR code here, click on it, and answer this poll question, right? What is your view on crypto assets? Do you think definitely yes, or no, it's too risky, or really, I don't know much about it, so I can't really say, I don't know enough, okay? And we'll get all the poll results at the end of the presentation. So from the securities industry, you know, the governor would have spoken about the types of tokens, and you're hearing these different, you know, words being bandied about, tokens and assets and what it really means, right? And from the securities industry, we're looking at securities tokens. So things that are backed by something. What is it backed by? And this is where you will actually have the stability in the whole system, that it is backed by something that we could actually measure. Of course, if you look at it internationally, you're looking at things like something called T0 or polymath. Those are the types of things you're looking at. When we speak about utility tokens, those are things that could only exist in a particular ecosystem. So something like Binance, right? The Binance coin itself. So Binance coins, you actually buy it so you would be able to pay for your trading and your transactions on Binance itself. And also, thirdly, in terms of the payment tokens, we're looking at things like the normal cryptocurrencies, Bitcoin, Ethereum, etc. So what are some of our concerns? Well, one of the things we have to start with would be AML, CFT, right? Do you know much about who you're interacting with, right? Where is the money going? How is the money being transferred? All of these types of things, you have to consider it. So the FATF, which is the international body called the Financial Action Task Force, they came out with a set of guidelines as to what countries should be doing in terms of AML, CFT. And they said they call it generally in terms of virtual assets and virtual assets service providers, right? And they went into some of the aspects that you should be looking at, how are you licensing these people? Are they registered? Can you keep track of what is happening? Do you have a tolerance level as to if it's below that, then it's low risk. If it's above that, it's higher risk. And what we saw internationally is that the IOSCO, or the International Organization of Securities Regulators, what they did is that they conducted a survey not only with the regulators, but also with potential investors, right, or people who would be interested, right? And this was the perception of interest in investing in crypto assets. So you realize that this was since 2020, and look at the shift. It didn't go from people are not interested, but it's more that persons are interested, but they want to probably know a little bit more. Then, in looking at it as well for the crypto, for the securities market, you saw, what you've tried to determine, well, why were people not really investing per se, even though they might be interested? And look at the top three. They didn't understand it. They found it was too volatile. And they had a concern that it was unregulated. So looking at it, you saw that the regulators responded at this point. And they said that, generally, so over 50% of the regulators thought that crypto assets really posed some sort of threat. And it's not so much in terms of it is a threat in itself, but it's because there's probably not enough regulation. People don't understand what they're getting into. This is on some sort of technology and platform, and people don't know who they're interacting with. So because of all of that, the regulators thought that there was some sort of threat, right? Once again, I'll say that this is from December 2020. But one of the things regulators saw as well is that there is a need for some sort of education in crypto assets. If persons are going to get into it, then they need to understand what they're getting into. So that's the international standpoint. What's happening in the region? Well, we saw all sorts of different things happening with legislation, with definitions, with some sort of policies, guidance. All of that is happening throughout the Caribbean, right? And it's all to be able to contain what is happening. In Trinidad and Tobago, this is very interesting. This came out of the Chainalysis review in what they called grassroots adoption of cryptocurrency. And what is grassroots adoption? Well, that basically means that if I have $100 to invest, how much of my $100 am I taking and am I investing in crypto assets, right? So generally, within the world, they saw that Trinidad and Tobago had very little activity when it came to this. So persons might be interested, but you're not seeing a large percentage of persons investing what they have in cryptocurrencies. But generally, though, they found in this particular report that the emerging nations are the ones who actually adopted the cryptocurrency, crypto assets faster than any other parts of the world. whenever you're talking about securities, you have to speak about the risk involved in it. And even though you see all these risks here, you may think that, well, you know, some of these risks, with any security, you're going to have these risks, right? But with crypto assets, you have elevated risk when it comes to volatility, when it comes to the technical and the operational aspect, as well as the lack of regulation. So what is the TTSEC doing? Well, first of all, we have to understand what is going on within our sphere, our arena. So you will see coming up that we will be launching some surveys, and we want to get feedback from the public concerning it, right? So we want to understand, are crypto assets actually acting like substitutes for some of the securities, the regulated securities that we already have? So is it that persons are starting to take more of their investment funds and investing in these things? And also, is it that generally you found the market itself, the players in the market are starting to go towards that direction in terms of crypto assets? So as the regulator, what we're going to do, we're going to launch an impact assessment, right? And that is where we're going to try to decide, well, what is there a problem? What is the problem? What are the risks involved in it? What are the pros and cons of it? And also, we will have to include the whole aspect of AML, CFT, and the FATF recommendations, because one of the things that FATF stated basically is that you have to have something in place by a particular period. That's why you're seeing some countries banning it, because if they aren't able to adhere to the requirements of FATF, you know what starts to happen after that. So some countries have made up their mind, no, we're going to ban it, just because they may not think that they're at a position to be able to adopt the FATF recommendations. And of course, the next thing that we're going to do is that we are going to start to build the regulatory framework associated with it, okay? So, next question. Once again, feedback from you all, right? Point your cameras to the QR code, and I'm going to ask you all a question. We want to get feedback. What types of crypto assets would you consider using or investing in, right? Would you like crypto ATMs, crypto exchanges, crypto crowdfunding platforms, those types of things, or something else altogether that we didn't have listed here? Or right now, you just don't know. You don't know what it is you might want to do. You might be interested, but you just don't know. So going forward, what is the SEC looking at? So we actually gave a timeline here, so we want the public to start looking out for some of these things that we're going to be launching. So in the last quarter of this year, we are going into internationally with all securities regulators, World Investor Week, right? So remember, securities regulators, when you speak with them internationally, there are two things they will always speak with you about. One, market integrity, and two, investor protection, always. That is what they will speak about. So World Investor Week is on October 2nd to 8th, and you're going to see some of our investor education promotions where we're going to be speaking about crypto assets, what are some of the concerns, risks, do you understand it? And prior, about 2 years ago, we launched something called the FinTech Pledge, and that was with the whole of the group of Caribbean securities regulators, right? And what the pledge is really like a list of about 7 points where persons go in and they get information, just bite-sized information on what is fintech, crypto assets, those types of things. And you pledge that before you get into investing, you will ensure that you understand some of these things a little bit more, okay? Then also we will be conducting the public survey. And that's why I told you all we would want to get feedback coming from the public concerning what are some of the things you'd like to get into in terms of crypto assets, all right? Then in the first quarter of next year, we're going to conduct that impact assessment that I raised before. Then into the second quarter, we're going to be developing our regulatory framework. And of course, after that, once we have the draft, we're going to go into market consultation. And all of this is because I know many times persons ask, well, what are you all doing? So this is what we're doing, okay? So I'd like us to put up the results of the questions that we had just now. Can we get the results up? Oh, wow. It's almost 50-50, yeah? You know, so you have persons stating that yes, definitely, but no, I don't know enough about it. You see why education is really important here. All right? Next one. So just so we can have the results of the next poll question. Yeah? Is it just taking a little bit longer? If not, I'll start to hand over to Mark at this point in time because I know I'm cognizant of our time. All right, good. So look, this is the results. 1, people really don't know. You see, this is from you all. This is not us saying this. This is from you all. So people don't know, but people are looking at more crypto ATMs or crypto exchanges. Thank you very much for your kind attention. And on to me.
Thank you. Morning, everyone. All protocols observed. I'm very proud to be representing the fintech industry, the crypto industry today. I have not taken this opportunity lightly. I've reached out to many stakeholders in the industry, both who have private interests, but also business interests. And I only hope to be a conduit of information for you all today to best represent how we can harness crypto for financial innovation and use this to navigate the future of finance in Trinidad and Tobago. So the current problem that we are really facing today is a fragmented financial ecosystem. So our private sector, banking sector, fintechs, central bank, etc., we need to start getting together more to build a cohesive relationship. Because what we're facing is locally our talent, our technologists who have the aptitude, who have the understanding of the technology are leaving. And it's very easy for them to do that. Some of them are even in Trinidad working for foreign entities because it's easy to set up a Delaware C Corp and get a US bank account and receive US funds right here in Trinidad and Tobago, and the banks aren't getting the benefits of this US income. We have Forex pressure, so crypto exchanges and fintechs, which are facilitating cross-border remittances, are putting a threat on our US reserves through the drainage and sending it outside, and also arbitrage with our current markets. The banks are also very nervous about their corresponding banking relationships. As we've seen in DC with Mia Motley stating how important it is for us to maintain our corresponding banking relations if we want to have US coming in, and also if we want to maintain our remittances within our banks. Our banks are running world-class software. We have the technology locally, but the problem is it's not being made available to fintechs that are outside of their umbrella. Again, collaboration is key because our digital borders are open and unprotected. What I mean by this is that with the invention of the internet, information flows freely in and out of our country, but now the internet has a native currency. It doesn't require AML or CFT to get access to crypto. You simply download an app, you go on a website, and you have access to a global financial system. We need to be able to stand on our own 2 feet in the face of open exchange. So how do we do this? Our best defense against a lot of these pressures is a good offense. We need to innovate. And what is innovation? Let's unpack innovation. Decentralization. We all don't like constant pressure from ourselves to regulate or to, any business process coming through one entity is not a good strategy. So we need to decentralize. Things need to be more efficient so that things can move a lot quicker. Accessibility, this is a major point. We need to make things a lot more accessible to people. This is a very big component of financial inclusion. Transparency builds a lot of trust when you can see exactly maybe the prices or how long it's going to take to get to a destination. Transparency builds a lot of trust in a system. Disintermediation, this is removing middlemen, making way for faster and more efficient processes. Resilience, you can leverage technology and you can leverage infrastructure so that you can create products that are a lot more resilient. Disruptive is a word that we don't really like to hear, but it really is about moving away from the traditional models and into more innovative solutions. Collaboration, again, you're going to see this a lot on the slide. This is key. We all need to provide forums where we can get together and start to solve these problems. And again, standardization, this is key for interoperability between all of us, setting a level playing field so that we all can understand what we're dealing with and move forward. So if you apply these innovation trends to industry, you can start to see where I'm coming from. So if we apply innovation to the taxi industry, we get Uber. We apply it to the hotel industry, we will get Airbnb. You apply it to retail, you get Amazon. What does that look like for fiat money and central bank issued money, government issued money? It starts to look a lot like Bitcoin and other cryptocurrencies. So what we really need to do is use cryptocurrency as a North Star for the direction in which we want to go. Because cryptocurrency is really just an amalgamation of computer science concepts, beautifully orchestrated to create an innovative financial instrument. And globally, cryptocurrency and its technology is being brought into industry. And we're seeing this with the emergence of CBDCs around the world. Stock exchanges are taking the Bitcoin currency and bringing it into their exchanges. This is great for protecting our citizens with their investments and providing a previously existing regulatory framework. Stable coins. This is something I think we should see more of in Trinidad. But you're seeing it around the world, USD stablecoins, Euro stablecoins, and legal tender. We've seen in a few countries around the world the adoption of Bitcoin, most famously in El Salvador as legal tender. An extreme example, but again, probably using crypto as a North Star for innovation. How do we get here? Leverage local talent. Some may think that we don't have the talent, but that's a bit counterintuitive. Our talent is local. It's actually being exported, even, as I said, right here in Trinidad and Tobago, but we're not reaping the benefits of it. We even have diaspora that want to contribute, but we need to create a framework for it. Fintech as a growth driver. Fintech in emerging markets around the world is the fastest growing industry. So for places like the Caribbean, Southeast Asia, Africa, Latin America, fintech is what's driving forward the GDPs up to 4%. That's $1 billion for our country that we're just missing out on. EID for compliance innovation, this needs to kind of be at the heart of everything. We need better AML, KYC, CFT policies, but also adoption. We have an EID coming. We definitely need to adopt that framework. And again, collaboration is key. We want to adhere to the FATF strategy and guidelines. One of their major recommendations is collaboration with public sector and private sector. So again, our journey to success, what this looks like locally. Technology adoption for greater efficiency. We need to start running from technology. We need to move away from paper-based processes, slow processes. We need to start looking at technology as the solution for our laggard industry. We need to support fintech ecosystems. And I just want to big up TTIFC for all that they have done for us as fintechs, but in creating an ecosystem locally. This has really helped propel us forward, the entire team at TTIFC. And This needs even more support. We need to keep driving into tech ecosystems, because this is where we'll all get together and start to innovate and create these frameworks. Fintech sandboxes with low barriers. I say this a lot, but the concept evaluation, before we even get our EMIs or our financial institution frameworks and pass evaluation of central banks, this is a harboring framework in which we can harbor fintechs, have them experiment, see them actually build the technology, because fintechs build the tech before they even pass the regulations. That's kind of the goal of innovation, is pre-regulation, so that you can understand what to do with it. Banking APIs and open banking, this is something that, banks hold a very key, they're very key to this entire ecosystem, because they are the entry for fintechs into the market. So they hold a very responsible role, and you need to start opening up your infrastructure to fintechs to collaborate, because there is a lot of money for all of us to make, but you just start to break down those walls and start to trust. We're all on the same side here. Education and training, I mean, this is by far like kind of one of the things that we really need to push forward for. Just getting people to upskill, understand what technology is, what fintech is. And again, I'm going to drive this home, public-private partnerships. We all need to come together and start collaborating. What that looks like is we are in a room, we're ideating, we're showing each other presentations about what this innovation is, and you're providing feedback, we're providing feedback, and there's constant discord in a physical space. Just to really showcase to you guys that, the real goals here, it's outside of crypto, it's outside of fintech, it's outside of innovation. Financial inclusion, we need to see more economic activity. We want to drive foreign direct investment into our country. Booming MSME sectors push forward our GDP. We want to become a regional financial hub. This is the ways in which we can accomplish that, and a major one here is less crime. Let's embrace digital transformation through collaboration. This is a call to action. Thank you, everyone, for hearing me out on stage. In the spirit of the central bank and their very extensive art collection, I decided to bring forward an NFT by a local Trinidadian. This is going to be the background for the rest of the conversation through our Q&A. But this is just an example of how local technologists, local artists are using blockchain to put our culture first. This is the hills of Paramin with our, the land of hummingbirds. I do encourage everyone to look at Nicholas's collection, because there's a lot of old history, there's a lot of culture from Trinidad within his collections, and I think it's a beautiful representation of what we can do when we adopt technology to move forward.
All righty then. Thank you to our panelists for the insights that they've shared with us up to this point. So we're about to begin the question and answer segment. So I'll take the opportunity to begin with a few questions that were shared with us in advance of today's event. I've tried as best as possible to summarize them, so we will take those first. We have a fairly sizable audience joining us online, so you're encouraged to enter your questions into the chat or comment feature on your preferred social media channel. Our team here will take those questions and pass them on to the panelists at the appropriate time. But starting with our introductory questions, Dr. Hilaire, in your presentation, you spoke a lot about the general themes and high-level features and considerations around crypto assets. And again, from feedback so far, I know there are quite a few persons keen on understanding what exactly is the bank going to be doing in the next few months or year or two. But not just yet. Yeah, there we go.
Thank you very much for that question, and thanks to my panelists. I mean, I'm all excited about this thing. You wouldn't believe. Today we are here at the central bank to really learn a lot, because we have a perspective which I'll share, but we also know that we need to be open and we need to learn, and this is what we are excited about today. Our basic perspective is that we need to balance what Mark was talking about, promoting innovation, because we think that as a country, as a society, we are talented, we have the resources, we have the willpower, we have the mindset to do a lot, particularly in the fintech space. So we want to promote that, and at the same time, we want to make sure that people understand the products and they are protected. So investor protection balanced with promotion of fintech, and of course, behind that, financial stability and so forth. Specifically now, what are we going to do? On the legislative front, we have certain ideas already, but we are not, a team of expert lawyers and know all the legal things, so we will be working with our legal people in-house, as well as trying to understand the legal gaps that we have to move things forward. We already had, as I mentioned before, the privilege of having an excellent IMF technical assistance team. They were here in April. Their report will be published, so look out for it, as I said, on Thursday morning at 10 a.m. on the IMF website. It looked at two aspects: fintech, what are we doing in fintech, recommendations for that, and then on the crypto asset side, some recommendations. So we will be looking at that, building on that, talking to people to move that forward. Again, on the legislative front, we have certain things that we do, certain biases already. We think that there should be some regulation of the intermediaries in our Trinidad and Tobago space. We would opt for not banning, not containing per se, but really some targeted amendments and regulations, as opposed to a big overall sweeping legislative reform. Why? Because we think we are still working things out. We want to maintain the flexibility to be able to move things forward, because the animal I was talking about, not only do we have to define it, but it also changes shape. So that's to tell you how we have to be aware of that. We are working on the public education side. We have our National Financial Literacy Program, and we will be getting some more insights into how to promote this. We have to be pragmatic, because most people are not understanding it, or maybe not interested in it, but we have to be aware and be able to explain to people what crypto is about, what are the investor issues and so forth. On our supervision side, we already looked at the Basel Committee's report on integrating the risk treatment of crypto for licensees, in particular banks. So, and that's supposed to be done by 2025, so that's already in train. And in general, this is what we want to do. By the end of October, continuing with the discussion with you guys and et cetera, we will be able to prepare something to set to the Minister of Finance in our capacity as our legal capacity as advisor on financial legislation. Our position that we will get, in collaboration with others, to send that forward. So these are some of the things that we do, and basically, some of the ambassadors might have to ask the local staff what I'm talking about, but our perspective is that we want to take in front before in front takes us. So this is what we are planning to do now.
Okay, great, thank you. So moving then, I guess, down the line, Alistra. So we did see in your presentation quite a bit of detail there on what your plans are going forward. I know we had a chat earlier this week, and you made mention of the treatment of fintechs or crypto providers using the existing space that exists. So as an example, the relationship between an exchange and a broker-dealer. So the question really is, what do we have today that can be leveraged, and how do you see the ability to use existing tools as a stopgap until we can make some advances?
Okay. So, there's a saying, the more things change, the more they stay the same. Sometimes, really and truly, what we have to go back down to is what is the same with what already exists at this point in time. So, when you've seen some crypto exchanges and the way how they would operate, of course, they're decentralized. And what would that mean is that you don't have a broker, you don't have an intermediary involved. You basically have persons actually trading with each other, peer-to-peer in a way. So when that happens, you have a situation where even internationally, all the regulators are wondering, well, who actually is in control of things? Who is keeping track of things? What is actually happening? So you have all of these questions going on at the same time. And then you see the regulators trying to retrofit. Well, what are you doing? And based on what you're doing, this is what our regulation says you are. So if you are getting into brokerage, then you're going to be under a broker-dealer type of regulation or that type of status. So you've seen, and you even saw it happen recently, right? One of the international countries, they actually started to look at the licensing of particular crypto exchanges as broker-dealers, right? So sometimes you have that option available. But even with it, you have to be a little careful because in the world of crypto, and this is just the way how crypto is, right? Because of the fact that this thing can move from being a currency, meaning that people actually buy and purchase things with it, right, to a security, you have like a different type of regulatory remit happening at any point in time. So it may be based on the way it is actually being utilized. It might be something that's under the regulation of the central bank, right? Based on the way it might be utilized. It might, as a security in that it's traded, it might be something under the regulation of the SEC. So what you're seeing happening right now is that internationally, the regulators, they realize that it is happening in our space. What part of it can we actually start to look at? And what aspects of it already mimic something that we have? And can we start with those things to really try to implement it? So that is basically the way that we're going.
Okay, great, thank you. So then, Mark, of course, you spent some time talking about innovation, and we had, on the other side of the conversation, regulation. So from your point of view, and I guess representing an industry point of view, what are your thoughts or suggestions on balancing innovation and regulation, reward and risk, and how should we really think about it?
In terms of innovation and regulation, I'd point back to education. I think we need to take a very focused step forward onto getting ourselves a little more technical, understanding technology. I mean, I'm not pointing any fingers, of course, but we need to absorb ourselves in technology and understand the innovations that are happening. And the ways in which we do that, I think it's collaborating with the technologists so that, getting in a room, having many debates, many internal conversations, external conversations, leveraging fintech ecosystems and platforms like TTFC to get us all into a room and collaborate really. So it's a very simple thing in a way where if the more we understand it as a whole, the more the innovators understand the technology, the more the regulators understand the technology, I think we can just match a very innovative regulatory framework that obviously protects individuals but allows innovators to innovate, of course.
Thank you. So now that we've had some content or some context to really seed your questions, I'd invite the persons in the audience to utilize the 2 microphones we have here in the aisles. So you can approach the mics, introduce yourselves, answer your questions. Of course, our ushers will assist where necessary. And again, to those persons joining us online, there will be a point in the conversation where our team here will pass those questions on to the audience. So that said, do we have anyone who would like to go first? I see we have a hand here.
Hi, good morning, everyone. Al Kieran Wright. I am representing the board of FinTech TT. I'm also a blockchain consultant by profession. So I have too many questions, but I want to start by maybe redirecting the conversation and maybe start thinking about how did we end up here in the first place? Why were cryptocurrencies introduced, created? What were they innovating on? And the position I like to ask is, do we think that financial inclusion is a basic human right in 2023. And from that perspective, has the existing financial infrastructure done a good enough job of delivering that financial inclusion? We have 1.4 to maybe 2.2 billion people in the world who are either unbanked or underbanked. We have 22% in the US, which is a very, very advanced society. And instead of, I think, looking at how we can use the existing infrastructure and these new innovations to achieve true financial inclusion, we are worried about who is in charge of deciding the vehicle. And I feel like that is counterintuitive. I feel like we're discussing whether or not credit cards make sense in the 1950s when the Diner Club card was introduced. Money, financial services are going to change. We moved from shells to beads to coins to credit cards, banknotes, paper to polymer, and now we're here. And I feel like we need to be embracing it towards what I think is the ultimate goal, financial inclusion. And I would like to hear your perspective on that.
All righty, so that's a lot to really think about. Thank you, Al. So I do suspect Dr. Hillier and Lister might have a position, and then we'll go to Mark as well.
Yeah, thanks for this intervention. And I mean, I believe you hit the heart of the matter, financial inclusion. What does it mean? It means having people at all levels of society being able to interact meaningfully on financial matters, because financial matters matter. Why? Because when you grow up, you have to have money, you have to have resources, you have to be able to live, to send your children to school, to invest, and so forth. If you don't have it, then you could be lost. You could be, as good as ever, but you can't put bread on the table. Well, your children would not be happy. So you have to be able to interact meaningfully in a way that is of benefit to you, your family, and society. Now, a lot of that takes education, because if you don't know, there is a power imbalance, a huge power imbalance. Those who have the money or control the money versus you and I. We are one. This is a huge system. If you're not careful, then you could be overwhelmed. Why? The legal system could be against you. Education, you don't know what is written on the contracts. You don't know what is happening. So you need to be educated, and you need to have also the infrastructure to be able to allow you to participate. So I do agree that is an important aspect. Now, you also mentioned something that is critical, that the way of interacting, or finance itself, is morphing, is changing, is developing, is evolving, is becoming extinct, from the beads to whatever, the fintech thing, everything online. And people have to keep in touch and keep going and keep understanding it, because whereas you would use a cash before, some places, they don't accept cash, or they have to have credit cards and so forth. Here is where the public sector, the government, the central banks, the financial regulators and international bodies have a role, because individuals by themselves cannot, they may want to be financially included, but they don't have the resources, they don't have the power, they don't have the knowledge, they don't have the capacity. And at the central bank, we are taking this very seriously. We have a national financial literacy program, which is quite extensive, and as I mentioned, we will be advancing in the areas of explaining the crypto markets and so forth. Now we're still doing a lot of the fundamental things on investment, on savings for retirement, on understanding your currency and so forth. But that's important. We are also moving towards getting existing financial institutions to become more open, to allow people to open accounts without having to go through bureaucracy that may not be meaningful. So we are doing our part. We think education is important. We think a certain framework of market conduct to make sure that financial institutions have a certain, conduct themselves in a certain way, by giving truth in advertising, by being fair, by being transparent, by opening up avenues for discussion, discourse, conflict resolution, etc. The other aspect, of course, we have an Office of the Financial Services Ombudsman, which celebrates 20 years this year. And this is the only one in the Caribbean where people can have redress and can come if you have problems with your bank or insurance companies to the Financial Services Ombudsman. On September the 15th, we are opening the new office in Tobago to serve the Tobago community even better. But I do take your point, financial inclusion is crucial. And the second point that things are moving as we speak, so people have to, you no longer have to, okay, you still have to spend time understanding what is on your money. You know, on the ones that have the nice signature on it now. Right, you still have to understand that, but you have to understand, well, what is a credit card and what is a remittance and what is Bitcoin and so forth. So we are committed and we are trying to do our best. We certainly welcome the feedback and we continue to work along with everybody to move things along.
So, go ahead.
I just want to quote Mia Motley when she was in front of the House Financial Services Committee in DC. Financial access should be a rite of passage. A bank account should be a rite of passage. And I don't think that cryptocurrency necessarily is the silver bullet given our current fiscal policies. So the access to US, for example. And the need for an individual to be included in a financial system is currently only really being met outside of the banks with cash. And in a digital era, cash really does not do you any good, especially when cryptocurrency, let's say, for example, I set up a crypto company and I want to receive income. I have to be very digitally savvy. So how can our people existing outside of the banks use cash to receive a digital transaction in a world that's diversifying and moving towards digital? So the EMI framework is definitely a step in the right direction. And again, I'll say it again, because within the cryptocurrency industry, collaboration is key for everything. You can see it all online. Everyone is talking about the topic. But locally, our financial ecosystem is not doing that. So again, I thank you for that question, Al, because financial inclusion is really about a concerted effort by everyone in the financial ecosystem to make sure that we're all doing our part to meet the people on the extreme end of society, which is everyone from a refugee to someone who is very cash-based and keeping their cash under their mattress, to someone who has the capital, the understanding, the financial savviness, the technological savviness, who is empowered by their knowledge and also by the banks always offering them a loan of X amount of money because they have good financial status within the banks, to create that platform where someone could go from financial inclusion to financial empowerment. And I do think, that cryptocurrency is really representing the opportunity to do so. And again, we just need to be inspired by the innovation.
Okay.
I just wanted to add that, yes, I also believe that financial inclusion is crucial. It is how people would be able to move around and survive in the whole environment. What was interesting is that last year I came across a review of the Trinidad and Tobago and the system. In fact, it was something that was done for all countries in the world, and I looked at what they said in terms of Trinidad and Tobago as in terms of financial inclusion, and they actually had it as a very high rate of financial inclusion, something like about 88% or something like that. What was very interesting as well is that they also stated that the use of credit cards and other types of products was actually very low, like some under 20%, some under 25%. So what it actually shows is a whole breakdown in what persons think are very important and what they think that, all right, I would use, or if I have to use it, right? But it's very important that I have certain things. And all of that comes right back down to education. Now, I know the TTIFC, right, they recently completed a whole survey about, and one of the aspects of it included that that review of the financial inclusion, and I'm not too sure exactly what they're going to make available coming out of that survey. But I don't think that it was far different from what it is that we've seen online right now. So is it that we're at a point where we're saying that, we should go the normal course of bank to bank products to, then you start to go, no, maybe it's time for us to leapfrog, right? Because, and I think it really comes to the point where persons, do they understand the benefits of doing something in a particular way? And that's where, you hear us saying education, education, education. That is where education comes into play, right? So it's not only that it's available and that persons can use it, but do people understand the benefits of it? Because even like right now, I think if you go into a market, in Ghana, right? I was listening to a lecture, and the person was speaking about the fact that when they went into the market, they could not use currency. Everybody was using their cell phones and transferring monies. And the person was in amazement of that happening, right? So if it is that that is being adopted at that level, is it that we should probably bypass what would be the beaten path and probably leapfrog into something a little different?
I just want to tack
Mark,
onto that.
Excuse me, Mark. I know there's a
yeah.
lot to say, but I do recognize we have some persons standing who seem to have a few questions as well, and I know Mr. Young may want to make a contribution. But on the left here, you'll give, perfect, sure.
Means in old age before youth. Governor, first of all, let me commend you and thank you again for facilitating this sort of discussion. Just for the benefit of people here, Richard Young, chairman of TTIFC, for my sins, and John Outridge, who's my CEO. For his sins too. About 3 or 4 months ago, we commissioned a firm to carry out a survey on financial inclusion. And Governor, I have to tell you, Dorian Noel, your deputy governor, has been harassing me every month. When is it coming out? When is it coming out? So I know that it is deep with the central bank. Survey came in at the end of August. And in fact, today, we waited for today first, and we will be extending an invitation to, I don't want to sound elite or anything, a select group of stakeholders, which would include the central bank, TTSCC, as well as the FIU, to start that first conversation, to share with you some of the results that have come out of this financial inclusion survey. A lot of stuff has come out, and then working with the UNCDF, we're hoping to prepare a roadmap, and of course with the Ministry of Finance, my favorite minister, and then we will develop a roadmap. And this roadmap will be then shared with the public in terms of how we're going to include more people into the financial sector. And we know that 80% have bank accounts, but only 30% use it, 20% have credit cards, and 75% of the business people don't even have a bank account. So it's a deep, deep study. So it has happened, and I guess there will be more to come. So just letting you know, Governor, there's an invitation for next week, Thursday. It's going to come soon, electronically, I hope. But I'm sure you will give it to your people. And so, no, it's not an email. So it's happening. Financial inclusion survey has been completed, and you will be hearing more about it. And I know that the board of the central bank is very keen on it, because they get harassed all the time about, well, you're doing this, well, you're doing that. So directors of the central bank, is going to come soon come. What was your saying again about we will take in front? And it'll happen. Okay? And just for benefit of people, FinTech TT was an organization that was also birthed by the TTIFC. I spent about $100,000 getting this thing formed, and I don't like to spend money. So,
Thank you, Mr. Young. So on the left here, we have a question.
Okay, good morning. Ryan Hamilton Davis, Trinidad Newsday. Well, I want to speak on the other end of the spectrum, more or less the end user end of the spectrum. And for a lot of people, the only real money is real money. No matter how many ones and zeros you put it, if you can't go down the road and you buy a doubles with it, or you buy a bread, or some means of trade of, currency for goods and services, you might as well just play monopoly with it. All right. So, how does the government intend to turn this digital currency or this digital framework into an end-user product for people to actually convert this digital currency into something that could be used for trade and barter? And what will be the ramifications of that? Does that mean that if there's a decline in the value of this digital currency, that central bank would have to subsidize or the government would have to subsidize? Is that part of the entire conversation? And how do regular people now say, I can use my Bitcoin or my Trinidad coin or my sand dollar, or whatever name we put it, and actually do something, for themselves?
Okay, thank you. So I think it'd be fair to make a small tweak to the question and to say, how do the regulators, how do the regulators plan to, or how can the regulators enable crypto assets or electronic payments or financial innovation in a way that's real and practical for the person on the street? As you said, how do we make real purchases, make real transactions, and what's the regulators' role there?
Yeah, thanks for that saving, Dimitri. Yeah, I like the question a lot, and I think it really comes to the heart of transactions. All money is an agreement between two parties to exchange for value. That's it. You could decide what you want. You could, as before, you could use a shell, or you could decide it would be gold, or you could decide it would be a polymer note, or whatever. So you just decide that you will use it. Now, I think what you were saying is that some people may say, cash is hard. I can understand this, but the rest is kind of ethereal, it's in the sky, is not. But if you have confidence that once you put let's say your Links card, and the person receives it, then you get the sweet bread. Well, then that's it. The important thing is that both parties have to have confidence in the ecosystem. In this case, it requires a little more thought and confidence because you're not seeing anything. You're not passing over anything. You pass in your card, you get it back. And you get the roti or you get the thing. But what happens? So, but the fundamental thing is that if there is a solid infrastructure for communication and a solid framework that is established for registering and validating payments, then that both sides believe in, then that's it. So I think if you go from the continuum, you start from, let's say, the Links card, and I want to use the example of the pandemic, because in the pandemic, people were forced to do things differently. They had to stay at home, they had to interact, they had to use less cash, and we saw that people who didn't used to do it, use it now a lot. A lot of online transfers, so somebody's cutting your grass, you make an online transfer. A lot of these things are coming up because by force of necessity, then you end up doing it. So I think that is a good lesson. Force of necessity, you end up doing it because you have to, and then you realize it ain't so bad. So education and some experimentation would work. As I said, we do have financial literacy programs that could help people to do that. And I think as we go over time, then it becomes more and more used and people get comfortable with it. As Listra was saying, in Ghana, you could go and buy stuff just using your card. I remember going in Brazil and use the credit card and bought things in the marketplace just like that. So I don't think it's that hard, but I believe people will want to have the education. They will want to have the support and the backing of some central authority, whether it's a regulator or so, to be able to say, okay, it is okay. You could do it. If you have problems, we will give you some redress. But I think it is not that hard a step, and people will recognize through experience that they have before from the pandemic that electronic transactions, whether it is just using your Links card or going all the way to some, cryptocurrency, once you have the infrastructure, it's okay, and the support. So, but I think it is something that we need to continue to work on to educate, and people will be able to move forward. Because that's the way the world is. If you try to go in the US and you give them cash, they want to know, well, what is this? You hold up the line. What are you doing here? So you have to be able to move with the times.
Okay, great, thank you. So, Mark, we have a regulator's point of view. In terms of making crypto assets and, I guess, innovative payments and transactions real, what should we see in the ecosystem? So I know we had the example here of tap to pay. We had the example of, cash holding up the line. But from the developer side, from the innovator side, what are the elements that make it real and not so ethereal and conceptual?
Yeah, definitely the adoption of it. So I'll just say there's a few local businesses that accept Bitcoin. But Bitcoin is, in terms of a means of payment, so the gentleman in the audience mentioned the volatility of it, which is counterintuitive to using it as a payment method. That's when you get to the education aspect, where the local business has to realize by them accepting Bitcoin, what does that mean? It means that they're accepting a payment method that can either go up or down in value, and you're willing to take that risk. So there's an educational conversation that's happening there with Bitcoin. So it's currently happening. It's very easy to take payments as a Bitcoin, easy to take Bitcoin payments as a merchant. And there's a bunch of open source tools that can integrate directly into your point of sale system. The innovation's already there. So not much needed to be done more than an education side of things. But, I mean, is that something we really want to be exposing and supporting as regulators as a solution for all of our merchants? I don't know. I don't think so. So you want to really start to adopt aspects of cryptocurrency that are better for a means of payment. So the stable coins, for example. Let's issue a TTD stable coin so that can be used as a payments method. Then you get into, I'll leave the fiscal policies out of this for now. But other than that, I mean, again, crypto is really just a vehicle. If you understand it, you will get to understand what it can be used for. And I think that's the main aspect of where we're going here, is that if I'm buying something at a market, I don't care if it's cryptocurrency or not. I just care that I have access to a financial instrument. And I think I'll go on the regulator side here, being if we have an innovative financial instrument that is bringing all the benefits, the financial inclusion, efficiency, fast transactions, accessibility, then we really don't need to worry about cryptocurrency and the threat of it, because we're offering to our citizens a better means of payment than what cryptocurrency is offering. So again, I just want everyone to understand that these are the things, but obviously crypto will always be there. It's never going away. So let's create those pathways, innovate, bring those payment methods, and then we'll be able to stand on our own 2 feet in the face of global exchange.
Perfect. Thank you. So I see we have a few questions here on the right as well.
It's not really a question. I want to make a statement, right? My name is Troy O'Donnell. I'm part of the crypto community for over 7+ years. I've been using cryptocurrency for all that time. I just want to kill the myth in the room that cryptocurrency will make you a millionaire overnight. It didn't make me a millionaire yet. Right? So it's all about, as you all say, education, right? The reason why the US government cannot pinpoint if it's a security or not is because if you look at the white paper of Bitcoin, it is just a store of value. It's like gold, right? In the peak time of COVID, jobs was lost. People moved towards Bitcoin, and financial protocols that the great minds in the community had created, which give them opportunities to live and pay the bills and stuff like that, right? What the crypto community been asking for regulation since 2000, in the 2000s, right? Back then, it was not as demanding as it is now. But now, as everybody, the demand is there. All officials are looking into it now, right? The regulations that we'd like to have is that we come together and we have a common ground that we're not, how to say, stomp persons from actually getting a livelihood, but actually elevate them to get a better life or a better lifestyle, right? That's what we've been asking for quite a time. Same thing as Ripple. As I say, Ripple win the last case because they thought it was security, and when they look at the white paper and stuff, it was not that. So they win. It took 2 years for them to do that, and they win the case recently. So it's nothing to be scared. Cryptocurrency is nothing to be scared about. Ladies and gentlemen, it's something that you need to educate yourself, read plenty books, read plenty articles. It's here to stay. It's not going nowhere, right? There are people around the world. It's a network. It's a community, right? The mining farms all around the world. People mining in the houses, in the homes, right? To earn income. It is a hedge against inflation also. That is what Bitcoin was made for. It was made for that. So, yes, we have entities on the internet. It has people that misleading a lot of people over the years. And that is why we need regulations. And when regulation comes, it is a healthy thing for the crypto market, because now persons that on the sidelines who want to be a part of our community will be more at peace, will be like, okay, cool. Because it's 3 types of investors in this space. There are people like me who understand it. There are people who will love the word regulations. Anything, you understand? Once they hear that word regulation, okay, the government says, we go, right? And then have persons who would like to get the stamp of approval and be more edified.
Okay.
Those are the type of person that I have here. I was one of the first persons who had the first crypto card. The name of the card was CryptoPay, right? I went to Nicholas Towers, and I'll give you all a story. I went to Nicholas Towers.
Well, I wouldn't want to cut you. It seems that you're definitely going.
I went to Nicholas Towers to buy some lunch at lunchtime, and I paid with my crypto card. And the person, first they are custom with FCB, RBC, you understand? They was like, what this
Can I
card
ask
is
you
about?
to just wind down the question? We do have
Sorry.
behind you. No, it's fine.
I'm just so passionate about it. I could go for hours because I have a lot of education and history. I've been in this. This is a wonderful space. It's beautiful. It helped me and my family as well. All I just ask is for us to work together and have a common ground for everybody, to have a place to move forward and have a financial stability. That's all I ask for me and the community. Right?
Thank you. So I do think your comment is reflective of opinions of a lot of folks. I'll take John's question, and then there's something you said I want Listra to respond to. So go ahead, John.
Sure. John Sankarelli from the TTIFC. And I'm just going to try to go back to the topic at hand, crypto assets. There's a few things Mark mentioned, right? Open banking, GDPR is not a legislation yet in this country. We also see the fall of the FTX in the US. We have seen lawsuits with Binance and Coinbase. And what really here, and I applaud you, Dr. Hilaire, for having this conference, which is the start of what I believe is a business model. And the business model should be that crypto assets needs taxation, right? A taxation where a crypto is sold and value add tax, capital gain tax is assessed to that. As well as if it's bought, you have the value added tax on it. This becomes a business model for the country, for the region. And I'd just like to understand where we're going with that from a country perspective.
Okay, thank you. All righty, so we will take your question in just a second, John. But the gentleman who spoke just before Listra, he highlighted one of the challenges in terms of classification. So the dilemma in the US, is it a commodity, is it a security? And then, of course, he made mention to the Ripple case, and there was also a hint in there of investor protection as well. So any comments, any thoughts on the amalgamation of things we have there? I know it's a lot.
Okay. So there's this test called the Howey test that was actually raised in the US Supreme Court for you to determine what is a security. And there are 4 aspects associated with it. And generally, it really has to do with what people expect. What do you expect coming out of it? Is it something that you are going to expect a profit from? Is it something other persons are working towards for you to get a profit? All of these different things that it basically speaks about. But generally, it's about that. And when you look at the way how certain crypto would function, you can't not say that it's not a security. It's a security based on how you're using it, all right? So if it is that you are using it to purchase something, and we spoke about that whole volatility aspect of the cryptocurrency itself, right? That you're purchasing something with it, you're getting something in return, then it's operating like a currency. When it is that, I have 10 Bitcoins, somebody wants to get 3 from me, how much are you willing to pay me to get my Bitcoins? That's no longer a currency. You're trading at that point in time. It becomes a security, and it's an asset, right? And then on top of that, this thing actually increases in value in that way. So you have to be careful when it is that you're looking at these things. Also, part of it is that whole aspect of the regulation and what's associated with it, right? So the regulation aspect, really everything comes down to confidence and people's confidence in what they're seeing on their computers or on their phones, right? And if it is they had to access it, what's going to happen? So case in point, right? You can have 1 million apps on your phone showing that you have $10 billion, right? And you try to pull some of that billion out of what you have there on your app, and you cannot get it. This is where everybody will start to run to the regulators, right? Because you have no confidence in what you're seeing there and what you're able to actually get, all right? So the regulation is absolutely critical. It's absolutely key. It is something that will also build confidence in persons. Because if you notice, one of the taglines of the SEC is that, to foster confidence in the securities market, right? So we're fostering confidence that people know that what I see there, what I own, I actually do own, and I'll be able to access it. And this is where it becomes actually very critical for us to have the regulation in place.
Okay, great, thank you. So we will respond to John's question, and then we have a few from the online audience. So Dr. Hilaire, I'm not sure if you want to...
Yeah, let me take this. I'm not a fiscal expert by any means, but let me delve into this. This is a fascinating question. It is also a thorny issue and response. So let's start with what I think one of your premises is, that a country can encourage this kind of activity, and what do you get from it? We have oil companies, we have more energy-based companies, and we get the country gains from, among other things, tax revenue. So you bring in fintechs, you bring in crypto, you have tax. But here's the problem. Remember I talked about some of the purported advantages. One of the things people say is that, well, this would be faster, less costly, and so forth. Because they may say, well, I don't have to pay tax on that. Because nobody could find it out. Now, there is, on the blockchain, you could go back and find out the transactions and so, but it's hard to really pinned down that it was Dimitri or Lystra or Mark that made these transactions. So now people have to volunteer that says, well, I did this thing. Well, who is going to do that? And so therefore, one issue in taxing it is whether by taxing it, you discourage it. Because remember, you also have, as I talk about regulatory arbitrage, you have tax arbitrage. You are taxing it, but, Timbuktu is not taxing it. Well, people go there. And then how do you get information on it? Because people may not report it. And how do you enforce the taxes? Because it is moving around. As I said, the animal has no home. It has going all around the place. So I think it is something that is quite thorny and international. The IMF wrote a paper on it recently also because they do think, just like there were issues before that about global taxation of different things, capital gains or something to avoid people just going to low tax and low regulation territories. But you do have that problem of, will it discourage activity? Will you be able to find out who did it or have to rely on self-reporting? And will you be able to enforce it? So while I do agree with you in principle, I think it does need to be sorted out. And if you don't have some sort of commonality of regulation across the world and tax regimes, then you could have problems.
Thank you. So as I said, we have a fairly large online audience. So at this point, I'll ask actually Christine to go ahead.
Good morning. Thank you, Dimitri. So we certainly have been having a lot of discussion and active conversation happening online. So I have just 3 questions. So I will start with our first question from Jaron via YouTube. Why are local commercial banks blocking all cryptocurrency transactions in TNT? Is this legal? And what recourse do we have as entrepreneurs interested in this space but unable to access via local banks?
Okay, thank you. So I know Mark is beaming at this question already. Go ahead, Mark, we'll start with you here. How are you making, and how are your peers making advances in the crypto space locally, given what may be seen as this constraint?
How are we advancing?
Well, I know you and your peers are doing crypto business, so could you just share your experience?
Yeah. So let me just say this. I don't dislike the banks. I just kind of don't like being treated like I'm a criminal. And I think this is a part of the conversation, is that when you have good actors and there's no regulatory environment, then you put good actors and bad actors in the same situation and you drive them towards markets like the black markets and the informal markets that facilitate a lot of these money laundering, etc. And what I used to take because I haven't been paid in fiat currency since January of 2018 as a business, right? So since 2018, all of my income is crypto. I went full crypto native. I decided if I want to push this thing forward, I need to understand it so intimately that I need to go to every country and see how I can off-ramp and on-ramp and pay for things. So it's a journey. It's a lot of gray hairs that you don't see right now. I've plucked them out. But it gave me an intimate understanding as to what needs to be done to move things forward. And usually the case is, in a lot of these countries, is that you're pushed into the informal markets because of the lack of acceptance by banks, commercial banks. So with commercial banks locally, first of all, Canadian banks we're not doing business with you outright. I did not get a bank with any of the Canadian banks. High risk profiles, they have very intense corresponding banking relationships. Republic Bank, do I call names?
Let's just...
Yeah, sorry.
You calling
I'll give them a little big up because they facilitated me as a blockchain company, but I'll just make it very neutral. So I used to go into certain banks with my crypto source of funds. Here you go. This is my crypto source of funds. And eventually one day I just got completely shut off. That wasn't because of my wrongdoing. This is the reason why commercial banks do not accept cryptocurrency. Because I mean, I'm going to give you all insight into what is happening locally. It's that people were using the US limits on their credit cards to purchase crypto, and they were taking that money, making a profit off of it, bringing it into their banks, and then profiting off of the spread. So it's less about a cryptocurrency conversation, it's more about a Forex conversation. So that's why commercial banks currently, I mean, with the risk and the pressures from de-risking, that's really why they're not accepting cryptocurrencies, in my eyes. You know, that's from my market research.
So Mark has given us some context as to his experience as a player in the market. And I do think the question has a retail element too. So as a retail customer, why can't I use my credit card or my funds in commercial banks to make payments? Dr. Lear, I'm not sure if you want to, no pressure.
No. I mean, let me talk specific and then general. We talked to the banks recently. We had a meeting with Bat, and we told them, having this conference, and what insights could you give us? And basically, I think the approach was that, listen, the banks as a whole exhibited caution. Why? Because they say, first of all, there's regulatory uncertainty. We don't know exactly what the deal is with this thing, something I mentioned before. And secondly, the potential risk of either, I'm just talking about if they were to invest or if their customers were to invest because of two things. One, would the customers' finances be at jeopardy? So they may take a different view of risk. You might say, well, okay, it is risk adjusted, it is a good deal. They might say, no, you will lose. And then also they may be concerned about the anti-money laundering aspect. So in all this haze and this desire to be safe, I believe that may have been part of how the approach is. Right. More generally now, and you mentioned foreign exchange and so forth, as I was talking about the macroeconomic impact in some countries and what in countries that, and it's well known in the literature, and if you look at the IMF paper, they did talk about it, where countries have capital controls or where you have a major problem, then people would go into any area that allows them to get around this constraint. I'm not saying it's the case here, I'm just talking about it in general. So I think that is something that we need to be aware of. And you find, and again, looking at the last IMF, the two reports, one is synthesis, as I mentioned, that is ongoing now because there's a synthesis of the IMF's and the BIS's position and their original report. They talked about the impact of cryptocurrency in particularly vulnerable countries. Vulnerable meaning that their macroeconomic situation is in deep trouble, and so therefore you have a move towards, we heard the term dollarization, well, cryptoization, that's a new word. But in other words, people move away from the domestic currency towards a currency that, or a medium that they think has more or sustainable value. And I think that is the macroeconomic dialogue that is alive in certain countries.
Okay, thank you.
Just want to tack on to that. I think last I synced up with that problem. I do believe that banks were accepting US funds from crypto exchanges. So I think it's actually, if I were to solve the problem, I think that's a great way in solving the problem because you limit the streams and you limit the informal economic activity and you get the benefits of what crypto should be, which is economic empowerment, and so the US would be coming into the bank. So I think that's actually an innovative way, but I would also like that the treatment of the problem would be, they don't annex a blockchain company from doing business. Mm-hmm. So you're blocking off one entrance, but you're not treating. It's an umbrella. It's a blanketed solution that ousts a lot of people into the financial ecosystem, and I think that is one of the major problems. Is these blanketed
Yes.
solutions are creating a lot of gray area and driving people into these informal markets.
Okay, so we have a few more online questions, but I recognize you've been standing here for a few minutes, so please, you'll
Thanks.
take
So
your
let's
question.
try not to buckle right now.
Apologies.
Pleasant good morning, all. I'm Giovanni Douglas from eCart Express Limited. First of all, I'd just like to help you all get at ease, not taking too much time, but cryptocurrency has been existing, or Bitcoin has been existing since 2009. And that hasn't been the only cryptocurrency from since that time. But it is almost 13 years after. And we are in this room here discussing all the things that other countries and other individuals have already gone through. And I'm raising that point to say we are behind. We are very much behind. And as Mark would have said, there's a lot of money to be made. And let's be real, we hear consistently about money, all right? Now, the central bank, TTSEC, we are all here hearing you all, and we understand that at the end of the day, the intent or the design is for the protection of the consumer. TTSEC, Central Bank for Regulation, TTSEC for Securities, and for the protection of the consumer. Now, that consumer is not only the business, the big businesses, but also what we're calling as the small man, the common man. Now, throughout the past few years that I've been involved in crypto, what I have noticed is that it is very difficult to purchase. Many banks would have shut it down. I wouldn't call any names as to where I would currently get mine right now, because I don't want it to be shut down. However, I would say that it has become a bit too difficult, and we need to. One of the things that I'd like to encourage you all to remember, if you all don't know, is that when Bitcoin was created, it would have solved a lot of the issues with the previous cryptocurrencies, but also it was a trustless and a permissionless system, okay? And we are now trying to regulate something that was designed to be trustless and permissionless. So all well and good in trying to regulate it, and yes, there are certain things that we can do to protect everyone. Now, in my experience with the banks, I would also do like Mark and say, not I hate the banks. Am I friendly with them? It's not very encouraging. And the reason it's not very encouraging because I have said we are left behind. There are a lot of great minds in this country. We are going on the outside, getting stuff done, and there are things that we can contribute to our local society. Our banks do not even accept digital signatures. So we are very much far behind, okay? Now, if I was to make a purchase online with my credit card for cryptocurrency, I would now have to pay a cash advance fee, all right? We are saying that crypto is not legal tender in Trinidad, but the banks that may allow it charges an extra, but it is not cash. My question now is this, and I am hoping it's not a rigged question. I'll try for it not to be rigged, but the intention of the regulation, is it for the protection of the businesses, or is it for the protection of all users, all stakeholders? And the extension to my question is this: how do you all intend to regulate those that may take advantage, and we're talking about the banks here, those that may take advantage of persons, the common man, who may want to buy crypto, who may want to get involved in this space? They may not fully understand everything, but I think at times the bank may overstep its boundaries when it comes to saying what is safe for me to buy and not to buy from companies or exchanges, for example, like Binance, that is fully regulated in some way, that would have gone all through their checks and balances with AML, with CFT. How do you all go through that process, of regulating the banks as well? That is what I would like to know, to make sure that they don't take advantage of those who simply would like to purchase. They are fully aware of the risk. We're not talking about trading here, which is another topic that I know many of you all don't understand, that the volatility comes with trading and the market makers, okay? But we're talking about just buying to save for the future in hopes that the stock price, for want of a better description, goes up.
Okay.
How are you all going to regulate the banks? We know how you all regulate the small man. How you all regulate the banks? Thank you.
Okay, thank you, Mr. Douglas. So, Dr. Hilaire, you want to start, and then maybe Lystra.
Yeah, let me just talk about, well, you mentioned a whole set of things, but let me just zero in on this aspect of dealing with commercial banks in general, or dealing with intermediaries. What our role is financial stability. So we want financial institutions that, as far as possible, are profitable and that do well. I mean, we cannot avoid an institution that is not well managed and that is not doing proper things from leaving the space. Maybe they should, right? But we want to ensure, for the most part, that you have financial stability and that depositors are protected. Depositors and creditors to some extent. Depositors, we have deposit insurance by the Deposit Insurance Corporation. Then we have our supervision team that tries to assure that there are good practices on liquidity and capital and so forth, so you would minimize problems for that. We do believe in competition, that the banks or the financial institutions would compete for businesses from individuals. At the same time, we give them some space to run their affairs. And so if a company, and I appreciate what you're saying, and I think most people in many instances would say, you know, I have a good product, and I want to invest in it, whether it's crypto, whether it's in real estate or whatever, and my bank or my financial institution is not supporting that. Well, the financial institution will have to make its own judgment as to whether it is risky or it is not. So we give them some space. So I would not say that we would regulate in the sense that tell them you cannot make judgments on risk based on your own experience. We would not do that. But we would try to make it have them be as transparent as possible and as fair as possible in dealing with their customers. But we really would not go so far as to say, okay, you have a customer that is involved in a certain activity. You have determined that, you know what, the risk of its activity is 8 out of 10. The customer thinks it's 2 out of 10. Well, you have to decide. You work it out. So we will leave it at that. And so I would not say that we would regulate them at all. I wouldn't want to promise that. Regulate in the sense of telling them, do not take into account your own assessment of risk. We can't do that, but we would try to encourage them to be as fair and transparent and be able to tell each customer, why am I doing what I'm doing? If they're involved in some activity and they want transparently and say, instead of saying, well, they know they are going to you know, if they are going to buy Bitcoin, but they say they are going to buy something else, well, you know, they are kind of obfuscating the thing. But if they are transparent, then the bank should say, you know what, our assessment is so and so, you have a choice. You could do it or you could not do it.
Okay, thank you.
Sorry.
Yeah, go ahead, Mark.
But last thing, I think, so there are crypto exchanges operating locally, and they're very cash-based, and it's very risky. So I do think that there needs to be a very supportive conversation for not just fintechs, cryptocurrency exchanges as well, from the banks to support, because dealing with such a high cash risk as a business is, of course, very dangerous. And if they're operating within the current regulatory frameworks that crypto is a digital asset, it can be bought and traded. That's like basically the as minimal as you want to get in regulations with crypto in Trinidad that I'll point to. So this is the main problem locally and it's, again, I'm not trying to point and put a lot of pressure on banks, but you have to understand your position in terms of economic activity, economic empowerment, not just for our individuals, but for our businesses. You have a high responsibility because for us to go from cash into digital money, into then the fintechs and the cryptocurrencies, you play a very important role. Because even a fintech, an EMI, which is the next innovation from the regulators of Trinidad to meet the needs of individuals, we still need a bank account. So we need to leverage that infrastructure. There needs to be some sort of public good act to make sure that this is available to our local businesses. That is one of the biggest problems locally for our movement towards crypto adoption, fintech adoption, any sort of innovation.
Okay, thank you.
I just want to add, in
Let's
terms,
just 1 second, because
Sure.
we do have an online question that actually ties in well with Mr. Douglas's question. So I'd like to merge the two concepts. So it's a YouTube question from Mark Lindersey, and he says cryptocurrency and blockchain technologies are at their root peer-regulated and permissionless. And he highlights the fact that they're polar opposites to the regulated environment of the banking sector. So his question is, has the central bank and of course the SEC considered how these divergent concepts might be profitably merged to benefit Trinidad and Tobago? And Mr. Douglas made the point that in the initial onset of Bitcoin and cryptocurrency, of course, he too mentioned the peerless, permissionless structure of the thing, the animal, so to speak. So, of course, if you could speak to, these two divergent concepts. So we have peer-regulated and permissionless versus something that's more structured and regulated. How do we merge the two?
Let's start
Yeah.
I'll come back.
Sure. One of the things that you have to always pay attention to is that it go beyond the permissionless and all of that. Do people know what they're getting involved in? All right? So as a regulator, we look at disclosure-based regulation, right? Are you giving persons enough information? Do they know if they need to have recourse, where do they go for recourse? Are they quite aware of the pros and cons associated with any type of investment? And we do not pronounce on what is a good investment versus what is a bad investment. What we have to ensure is that you have all the information and understand the risk associated with it. So even if you're looking at permissionless or anything, do people understand? Do they have all the information? Do they understand the risk? Do they know what they're getting involved in? And this is something that it's not, one of the question before about if it's just going to be targeted at businesses or we're going to be looking at regulation of businesses and the investor themselves. No, what we're looking at, and I think that persons have to understand that, as regulators, we don't want to come in and put on the handcuffs, We only come to that when we have to come to that, okay? But really and truly, our role is that we want a vibrant market. We want a vibrant ecosystem. It's just that we have to have the rules by which persons have to, abide with to make it fair to everybody involved in it.
Thank you.
Yeah, maybe I could jump in here and tag on to what Listra was talking about. Left up, and going back to the question of asymmetric information and understanding, the individual person will hardly know what is going on. So the individual person needs to have education and needs to have, I believe, somebody to tell him what's going on because it could be overwhelming. Most people don't know what is Bitcoin or what is Ethereum or what is Ripple and so forth. You just kind of know, well, you put money in it and you make money, you lose money, and sometimes you don't even worry about why. But, so that is a fact. Let me go on to another aspect about permissionless and related to the decentralization. The idea is that the system itself would work itself out. There would not be market manipulation, and things would kind of work. But is that so? If you look at the variability in some of the prices of Bitcoin, of some others, you say, but wait a minute. The market by itself could fail, and it could bring down others. And also that, there could be some market manipulation going on. When somebody sets up a Bitcoin, the whole thing is Bitcoin, you get the people who are setting it up, they give themselves some Bitcoin. You have stable coins set up, then it may crash. And then somebody has to come in and you have what you call a hard reset or whatever it is. And so there is a possibility of, in this opaque system, market manipulation, scams, because of the opacity. Now, I'm not generalizing and saying that this is not, that this will happen throughout, but I'm saying that it is a real danger. It has happened, and it does happen. You have something called pump and dump. It's not a calypso that I'm coming up with. But people set up something, some coin, the Alvin coin, and then you boost the price because they buy a whole set of it, and then guess what? Then they sell it quickly before the price goes down. Well, the people who are investing in it, they say, well, all right, they just invest in it. So we have to be careful that just letting things, decentralization, peerless, or permissionless thing by itself, that you have no role for kind of some broad understanding or some consumer protection. I think that would be a mistake to just let it go like that.
Okay, thank you. So I recognize we have our colleague from the Newsday here, and then Ms. Plowden from the FinTech TT Association. So we'll go here, and then we'll come back to you, Al.
Hi, Ryan Hamilton Davis again. I think the conversation is going kind of straight towards my question, which is, well, you mentioned the animal in the room, and one of the main ways to identify it is the concern that if I invest money in a cryptocurrency for means of exchange, which is one of the main reasons why people do it, and they look to get a return on that investment, you can't get your money back. And that's one of the main concerns that happens with this. So, and it's really basically bad actors that really force this issue. All right, so how are the regulators seeking to identify these bad actors wherever they may be? I'm not going to say whether it's in the bank or outside. How do you identify these bad actors, and what do you actually do with them when you identify them?
All righty, so how do we identify bad actors? Dr. Hilaire Listra, on the securities and then, of course, on the
all right, yeah, I think we have to go before that and say, well, because we are still working out the conversation as to should you have it, should you allow it, but let's assume that you say, well, let's allow some certain kind of things. Then, of course, as I was saying, in the central bank's perspective, so far where we've reached, is that if you have certainly domestic agents, they should have some kind of licensing to allow them to operate, which means that they have to have some basic things about their capital, their fitness and propriety, their capacity to run the show, their risk management, and so forth, to be able to say, okay, at least we could find out who it is, we could be able to deal with that person or individual, and I believe that would help. But it becomes really complicated when you have it all around the globe. You don't know who is involved. You can't pin it down. So I just wanted to mention that as perhaps one contribution. If you decide to allow a certain activity, then I think these kind of basic criteria about fitness and propriety, capital, liquidity, risk management, and so forth would be part of the evaluation, and as well as the regular laws to be able to allow you to enforce.
One of the things that we would look at would be this whole investor education aspect, right? As a regulator, we cannot be everywhere at the same time. We do not know what might be happening in certain areas, right? We have reports coming into us, we look at certain things, but we need investors to also play their role in it as well. So if it is that you're going to get involved in some investment, what exactly do you know about the investment, the parties you're going to get involved in terms of that investment? Do you have any set contracts? And even sometimes what you've seen and what we've seen is that persons, they get lured by this promise of these very high returns. And they're not even asking questions as to, well, how are you all going to generate those returns? What are you all utilizing for that? And they go running into it. And hence why my comment about going on your app and seeing that you have something with a whole set of zeros and you're happy, right? And then you want to know, well, I can't get this, and why? So a major part of it from a regulatory standpoint is that we are focusing on investors, and we even have an investor protection app right now at the SEC. So if there is a concern, you get involved in something, you have a concern, you make a report to the regulator via the app so that we would be able to actually conduct our own investigations concerning it. So it's more going to be, I say, a collaboration between the regulator and the persons who want to invest.
Okay, thank you. So, Ms. Plodden, if you would like.
Quick scan of the room, and BAT, Bankers Association, don't seem to be here, but they are such an instrumental part of the conversation as the questions being asked, as well as Mark so eloquently, explained. So is there any reason that BAT is not in the conversation? And Mr. Young, I know you're having your nice exclusive event coming up. Will BAT be added to the Central Bank and FIU panel? Not as yet? Well, I think they need a place, right? I think we could all agree that BAT they're part of the ecosystem. So instead of us talking here and then, whispers getting to them or they watch the YouTube video, they should have a spot right next to Mark so that they can come and they can speak from their perspective and we can all make a decision together.
Okay, well, I guess I can speak to today's attendance, and I'll let the governor speak to engagement with BAT. So, yeah, we definitely did invite quite a few persons today, and at present, based on feedback I'm receiving, we have just over 200 persons online making broad comments and engaging quite freely. So BAT was one of our attendees. We had the Chambers of Commerce. We, of course, have the diplomatic community and academia. So don't assume because a person isn't in the room, they aren't taking part. So we quite likely do have a lot going on online. But we have, do you want to make a comment about engagement, or I think you already did?
No, I think it was, when we had a meeting with BAT, they did emphasize the importance of it. And I think they may send representation here, and you may not recognize them as wearing a BAT, T-shirt or something. But I think the bankers are generally involved, and I think they should be. And so I'm not concerned about that, really.
Okay. So Al, we will take your question.
Yes, thank you. I am very thankful that this conversation has begun in this forum. Clearly, there are too many questions, too many answers to be given that we can't deal with here. I think what keeps coming back is education, education. And for me, my question is along the lines of, so we have the TTSEC, we have the CBTT, we have the banks making decisions around the future of this industry. And I would like to know how many technocrats, how many people do you guys have on your staff who have technical experience, technical expertise about this particular industry, this particular topic that you are aiming to regulate and you are making decisions about, right? My previous life was in the financial services industry, last spent in risk management. How are we risk managing something that we ourselves don't understand? Are we bringing, I understand we have resources from the IMF, but ultimately the IMF as an institution has its own agenda. We need to make sure that we are using the resources like Mark talked about locally, bringing people into in-house, sending our in-house people out to be trained so that we can speak on this myriad of topics that is contained within this overarching theme of blockchain. I've sat here, I've heard so many false equivalences being shared about this topic, which makes me understand that we are nowhere near the level of understanding that we should be at as we move towards talking about regulations. So, I mean, that's what I really want to see. The knowledge being brought into the various institutions who are responsible for ultimately participating in this space. Yeah, thank you.
Thank you. So, well, this sounds like a good time to potentially make mention of the joint FinTech Steering Committee, and if necessary, I can contribute on the technical committee side as well.
Yeah, I'm not sure about the false equivalences. It might be, you might want to explain that to us, because if we make some mistakes, then we'd certainly want to correct it.
Just quickly, little things, you know, we're comparing a 14-year-old industry to the banking industry, which was started in 2000 BCE. We're comparing anti-money laundering consideration in the crypto market, which is 1 trillion in market cap, to the banking industry, which we've seen $5 billion just in fines in AML in the banking industry. So I feel like when we speak about crypto blockchain, even the discussions around where we don't distill the value of the technology against the price and capital speculation on the fluctuation, we use terms like volatility, which aren't fair. If we look from an inflationary perspective, the TT dollar and every other fiat currency is devaluing over time. When I started my working career, I was making about $4,500. A doubles was $1. Some 2 decades later, if I started as a teller in a bank, some 2 decades later, a doubles is $6. A teller, to be able to enjoy the same purchasing power that I had 20 years ago, would need to be earning $18,000 a month. I don't know if any bank teller is earning that right now. So the idea that cryptocurrencies are devaluing, it needs to be contextual, because there are regions in the world where the currency is being devalued at a higher rate. That's why the adoption of cryptocurrency is so high in certain regions. So it's a very nuanced conversation, and I feel like we are making very general statements to a group of people who may not understand those nuances, and it may be defeating what our goal is ultimately, to drive the conversation forward. And I just fear that it's being driven from a place of fear rather than a place of seeking to understand.
Well, I'm not sure if I completely agree with that, because I believe we took time to explain that in countries where you have macroeconomic difficulties and a collapsing currency or high inflation, that people will flock to a store of value. And if the store of value happens to be, you know, a large country currency or a vehicle such as a cryptocurrency that allows you to go in that direction, then I think this is what happens. That maybe we didn't communicate what we had in mind effectively. But I think the larger question you mentioned is about resources. It is something that all countries, all regulators are struggling towards. But the first thing is to understand it, that the world is dynamic, that we have a thirst for knowledge, and the important thing is that regulators recognize that they need to get this knowledge. How do we do it at the central bank? Well, we grab people like Dimitri here from wherever he was. And so we look for people who have that dynamism, who have that power, who have that intellectual hunger and capacity to do things. We also try to educate ourselves. I had to read all this stuff in the last couple of weeks. We have a community in the bank that is supposed to foster intellectual tuning up of ideas. And then we also chat with people like Mark and others, and Francis and others, to make sure that gaps that we have are filled by getting other information, as well as international organizations. So I think you may be mistaken by feeling, if I got you correctly, that we should have all the resources in-house. I don't think we will ever have it in-house because things are very dynamic. We should focus on our education of our staff, our intellectual hunger, definitely, hiring the right people, and interacting with other regulators and the community to be able to build that knowledge and understanding.
Alrighty, so just 1 second, if you may, because I said we have about 15 minutes or so at most, and there's one online question that I think it feels like a good point to get to, and then we'll come right back to you. So one of the questions online, Mark, and it was a question in advance as well, relates to the relationship between the regulator and the innovator. And this is something you touched on in your presentation. So how do you see, or what does the community feel to be the best way to foster this interaction? What would be the goals that you'd like to see coming out of it? And of course, to tie into Al's question, what challenges do you see in terms of technical know-how? Do we need regulators with deep technical know-how, or is there maybe another alternative that we should explore? Yeah.
Yeah, I mean, I mentioned it in the presentation, public-private partnership. I know government is more of a quasi-public organization, but just more collaboration, more involvement. I actually do commend the central bank for being so open to putting a platform out like this. Mr. Hilaire jumping on virtual meetings to hear directly from fintechs and EMIs. So more of this, using places like the TTIFC to harbor the conversations, be more pointed towards, if it is a EMI conversation, a crypto conversation, just getting in the room. I do think there is invaluable, it's just extremely invaluable being together in a physical space than virtual. So as much as that as possible, or striving to that. I think that's the right way to go in terms of next steps. It is innovative, kind of breaking down the silos and rubbing shoulders with industry. But it's definitely something that smaller countries, I think, need to do more often because, we do struggle from a lot of talent. And if we're creating silos of information with all of our talent, how are we all going to move forward as a nation? So I definitely think that is the next steps. It's not going to be, our crypto protocol is coming out tomorrow. It's going to be, how do we take the next steps in that journey and collaborate together? And again, that's one of the recommendations from the Financial Action Task Force. A lot of the regulatory bodies is collaborate, private sector, public sector partnership, move forward together. Yeah, that's kind of where I'm going. Let's have more meetings, more events.
Thank you. So as I said, we're just about 15 minutes out from the close, so we'll take a few more questions and then we'll have closing remarks.
Good morning, everyone, and good morning to the panel. My name is Nicole Anna De Silva, and I am here from RBC, and I also hold another position, which is the chair of the legal committee of BAT. So scanning the room to say that, and to express the interest that we would like to state in terms of the developments from the regulatory perspective for crypto assets. So that is the main purpose of my presence here, to be able to observe. And I was drawn from my seat based on some of the comments from the audience as well as from the panel. But I think I would like to focus in terms of my question on Mr. Pereira. Have no fear, it's a very simple question. There was one of your slides where you were going through innovation, and you had two items on that slide that piqued my attention: decentralization and collaboration. Decentralization was higher up on the slide and collaboration lower on the slide. So I just wanted to get from you, how do you see the harmony between those two concepts when it relates to innovation in the crypto asset regulation space?
Again, I'll answer that in the sense where I think to get to cryptocurrency, we have some steps to take to get there. in terms of decentralization and collaboration, that is actually how we'll walk the path to get there. And I'll give an example. One of the ways, we have some other EMIs in the room, is decentralization of your infrastructure. So how can, I mean, it's really how do we stand to benefit from innovations is the conversation, right? For banks, currently, in terms of financial access and inclusion, like you have a 70-kilometer distance between Sangre Grande and Matelot. So on a 70-kilometer distance, there's no financial access for an individual in a very non-inclusive market. So how you can leverage decentralization is through like EMIs, for example, collaborating with EMIs to promote more financial access, because that's what they do. They decentralize the infrastructure. And one thing I didn't put in there is incentivize distribution. So what crypto does really well is it incentivizes individuals to run the infrastructure through mining. But with EMI, you have agents who make a profit from distributing your currency. So these are really innovative ways in which you can use this decentralization to partner up with fintechs, collaborate, to leverage their incentives to make money off of the customers that you're currently not serving. Again, TTIFC issued a survey. The amount of cash-based users, or primarily cash-based, is around, I guess, the amount of cash transactions that happen is about 70% of all transactions locally. So you have 80% banked users, but then 70% is happening in cash. So there's a definite mismatch in terms of our digital users. And that's kind of the point, is that we need to have more digital users to be able to understand what their behaviors are, to then start introducing cryptocurrency, because cryptocurrency in itself, again, it has a lot of great financial aspects to it, like financial inclusion, accessibility, potential upside for investment, cross-border remittances. These are all things that I think if we innovate, we can start to break down those barriers. And that's just an example of how you can use decentralization and collaboration to get towards offering cryptocurrency.
Thank you. And good day to everyone.
Good day. Glad to have you.
Good morning, everyone.
Hey, good morning.
I represent the other BAT, in this case, Gina Samru, President of the Insurance Brokerage Association of Trinidad and Tobago, IBAT. We don't necessarily agree with Mr. Pereira that innovation necessarily comes from disintermediation. Rather, our sector, purely intermediary. Evidence is the great and good that can come from intermediation. Be that as it may, EID for compliance regulation and the interface between crypto and AML CFT has been raised continuously throughout this conversation. When the AML CFT legislation was first promoted within the traditional financial sector, insurance and banking, it did and continues to impose huge costs and discombobulation promulgated by the need for regulatory compliance upon the financial registrants. So much so that subsequent to the initial legislation, we had some meaningful regulatory movements or attempts to ease some of the regulations or restrictions. We heard the central bank raising issues such as simplifying processing requirements for the elderly, the unbanked, trying to get people on board so they could retain their bank accounts, their insurance, etc. In a specific and very tangible manner, what do you envision that AML CFT will look like for a regulated crypto sector, especially as they have historically represented a higher risk sector than the traditionally low risk insurance sector? And that is to Mr. Hilaire, as regulator.
Oh, thank you very much for identifying me. No, I mean, I don't think it's actually that much. Huh? What is anti-money laundering and combating the financial terrorism about? It's about identifying sources of funding for these activities and then dealing with them. That's basically it. Now, with the crypto space, now, as I mentioned, there's some things that define it that may make it less easy to pin down. One, because it may be decentralized, you can't say, well, it's here, it's there, who's in charge of it, and who do you regulate now in Bitcoin? who is going to tell who thing, right? People have to self-select themselves. Is a blockchain, is decentralized, is, people, trying to validate these things, by mining, or if it's Ethereum, you have some other form of it. So it means that it may be a little more difficult to do it, but I think the principles are the same. And some may say, so the first question is, how do you do it? And I think it could be tricky because of the pseudonymity, as they call it, or anonymity of some of these transactions, and just finding out what is happening. And the fact is that people may want to gravitate more into it. As some say, you have some Bitcoin that if you go through the blockchain, you could actually see it, so it might actually not be a good way to do it, but people may still try to use it, or they use other crypto assets that are more anonymous. And then, so I think it's more or less the same. The other aspect, as we talked about, is whether it will actually encourage more transactions of that nature. And the jury is out, because some people find it is easier to get, because then you're not sure, who the transactions are. So, but I don't think fundamentally it is that different. But I do think there is a potential avenue because of the speed of transactions across borders, for it to be used potentially for that activity. So, okay. But perhaps I could just tag on to something that Mark said very quickly about, he hinted at, well, why get into cryptocurrencies? Well, if you look at the potential advantages or the purported advantages, then you say maybe there are other mechanisms of sorting these things out. Okay, speed of transactions. It means that your payment system may need some work, because if it takes a lot of time and effort to go from Nicaragua to Mexico, or Nicaragua to the US, or people remitting funds from the US to El Salvador, because the system is clogged up, or so, maybe the payment system needs to be sorted out. So we are working on that at the central bank to improve our payments system. Cost. If it is so costly, well, perhaps there needs to be more competition. There could be more competition. Decentralization, well, that might be a whole other thing. And why are you saying decentralization? Well, because you don't trust the central banks, because central banks are pumping money, devaluing the value of the currency, and in local terms through inflation or whatever. You should have a strong monetary policy framework or fiscal support that leads to macroeconomic balance. If you have other things about consumer protection, so sometimes by getting other things going, then you may not need to go into cryptocurrencies. One of the other things that we haven't talked about, and that could take us a whole other session, is something that could be centralized, but use some of the advantages of crypto, which is central bank digital currencies. So some countries around the world are embarking on it. You have some in the Caribbean doing it. Briefly, we have been studying it for quite some time, again with support from CARTAC, from the IMF, from different parts of the world, so we understand the story. We are not getting into that at this stage. We are working on the other aspects of improving our payment system, getting our laws organized, and other things to have private sector solutions, but in time we may be going in that direction. So sorry for jumping in, but I just kind of
it's okay.
went into it.
So we've made an effort to address as many of the questions as we could today. I know there are quite a few more that we could probably stay all day if everyone was fine with that. But at this point, we do need to start to wrap up. So I'll ask each of our panelists to just make brief closing remarks. Starting with Mark.
Start the other way.
Yeah, we'll go the other way.
Yeah.
Then we'll have a vote.
Yeah, in the spirit of being a conduit of information, a member of our audience, Ian Allen, when I was having a chat with him, said, what's the next steps? What's the goals? What is going to come out of this? And I really want to just explore that, in a very deep sense and a collaborative sense. And CBDCs may not be something that we want to explore. It might be stable coins, taking trends of a decentralized exchange and factoring that into our Security Exchange Commissions to see how we can innovate and create a very vibrant stock exchange ecosystem, to combat or to be almost as innovative of our friends in Jamaica. So I think really we'd love as fintechs to start to showcase the technology, because luckily in the crypto industry, it's open source technology. You can download it, run it, own it, and it allows you to innovate very quickly, because the technology, once you understand it, you can start to touch it, feel it, and really understand it. So I'd love for us to start, demoing within open forums, having presentations, and really, engage and debate with each other on how we can move things forward. Because internally, it may not seem like the next step would be this certain innovation, but that comes with a lot of bias with the internals. I'll take a quote from Felix Siman, who I had the pleasure of sharing a panel with at this. He said, we know that internally in our big enterprise, Unicoma, that we can stifle innovation, because that is really what we're trying to do, is de-risk, de-risk, de-risk. So if we want to innovate, we have to look outside of our umbrella at the fintechs and the innovative companies that are latching onto these concepts and making sustainable business models. So, I think that's kind of a good idea of how we can start to move outwards and receive input from our private sector to influence change within the public sector. Thanks.
Well, I would say about in 2019 or so, the SEC would have launched a survey to try to determine what was the fintech appetite within the Trinidad and Tobago and the market itself, right? And what happened is that it was so disappointing that the kind of response that we got from the public, I think we got something like about 2 responses. And we had, I would say, a very long campaign on all sorts of media to get feedback. So the fact that as a regulator, as the regulators are coming and asking the public, please tell us what you would like us to focus on. Please say, please use that opportunity to respond and to engage with the regulators. Because as with any organization, we have limited resources and we have a huge mandate. And what we're trying to do is balance that with what is really the requirement within the environment. And your comments, your contributions, your responses actually play a very big role in terms of what it is we chart when we start to put forward our framework to go forward. So I would say, especially within this next quarter, look out on our website for the survey that we're going to conduct. Be a part of our impact assessment when we send out the call for it. And also from an investor standpoint, start to get your information so you would understand this space and you're not taking information as hearsay from someone else. You do your own research, get around with what is happening within the field.
Yeah, for me, first of all, I started off excited and I ended up even more excited. I mean, this thing has been fantastic for us. It is a learning experience. I mean, I really commend our panelists here, Mark, Listra, Dimitri. I mean, world class. I mean, the kind of intellectual quality, the ideas, the audience. I mean, we have it in Trinidad and Tobago. There's nothing we don't have. We just need to harness it. Continue with the self-confidence, because I think that may be one of the only things that we may not have. We may say, well, somebody else could do it. We could do it. We just have to harness that. In terms of next steps, as I said, we are going to continue and chat with you and look at send us all your comments in the next couple of weeks. So by the end of October, we will be sending something to the Minister of Finance, as I say, on the legislative side. And I'm sure you all would also be sending your comments to different people. It will converge at some point because we have to move things along, but we have the capacity, and I'm excited. So thank you very much.
Okay, great. So with that, I'll take a chance to express my sincere gratitude to the panelists for their invaluable insights. And when we started, I mentioned that our objectives today really were to advance public education and raise awareness. I think it's safe to say that we've achieved that one. And then, of course, to be able to gather feedback to inform our work going forward. And I'm sure your comments and questions and queries to the email address that you're seeing on screen will go a long way in that regard. And then, while we do have a very vibrant audience here today in person, I'd also like to thank those persons who contributed online via social media. We do know that quite a few of your questions, we weren't able to get to all of them, but as best as possible, we'll try to take those into consideration as we go forward. To the joint central bank and TT-SEC teams who would have made today possible, the teams who supported the initiative, I'd like to thank you for your role in ensuring that today went as smoothly as it did. And as I mentioned at the onset, of course, the presentations are already available online on the bank's website to download. And a recording of today's session will be made available, again, via the bank's website and social media platforms. Any comments or questions can be shared via the email address that you're seeing on screen. So from all of us today at the Trinidad, Central Bank and the TT-SEC.
And Z Labs.
And Z Labs. We do thank you and hope that you enjoy the rest of your day. In terms of folks in the auditorium, we ask that you join us in the auditorium lounge for refreshments, but first we'll have the panelists depart the stage, followed by the members of the diplomatic corps and other specially invited guests, and our ushers will assist in having everyone exit in an orderly fashion. Thank you.